Hello and welcome to ActivTrade's biggest market movers. Today I'll be looking at the Australian dollar against the US dollar. I'll be discussing the upcoming economic events affecting the currency pair this week, and I'll also be having a look at the key technical levels that you need to know. So this week we have two main risk events for the Australian dollar. First of all, we have the RBA interest rate decision and policy statement, and then we have the non-farm payrolls job report on Friday. If we have a look to the RBA interest rate decision, the RBA are expected to keep rates on hold at 1.5%, although the policy statement may create some volatility. Any mention on the rising value of the Australian dollar, persistently low inflation in the Australian economy, and any mention as to what other central banks are currently doing as regard to their fiscal policies. If we have a look to the key technical levels going forward, first of all, we will have a look at last week's high, which was the highest level for the Aussie in 2 years, which was around the 80-60 level. We've fallen underneath that, and of course we've moved back below that crucial 200-week moving average, and we failed to close above there last week. We're currently trading around the weekly pivot point around the 79-77 region, so all the time we're trading underneath that level. We have the ability to slip towards the former weekly low that is just below the 79 handle, and of course we've got that key 50% Fibonacci retracement around the 78-69 area, so keep your eye on those levels on the downside. To the upside, if we move above the 200-week moving average, we may gravitate towards that former high around the 80-64 region. Keep your eye out for the 61 Fibonacci level, which is set at 81.15, and keep your eye as well on that former structure high there around the 81.70 region. Thank you very much. This has been ActivTrade's biggest market movers, and you can trade the Australian dollar against the US dollar at ActivTrades for spreads as low as 0.6 pips.